You were listening to ChartingWealth.com's weekly review and forecast for the week beginning Monday, the 26th of September, 2016. We're going to go through all four of our charts. That is for the total market, the S&P 500, the NASDAQ 100 in gold on the weekly, and the daily chart. Then we're going to talk about news that moved the market over the last week and what might be affecting the market in the coming week. That's why we call it the Charting Wealth Weekly Review and Forecast. Let's jump right in. What do we see going on with the weekly chart? Well, we have drawn our weekly trend line. We actually drew it going down last week. We got a crossover going down on the 9th of September. Continued to move down the following week. And again, when I talk about weeks, we're always talking about the ending day of the week. That was Friday the 9th of September. We also had another down week on the 16th of September, that week ending, and we had an up week on the week ending on the 23rd. However, curiously, the derivative oscillator continued to heat up going down, and the MACD and the signal line have basically started to run parallel. They're not going down at the same force they were the prior week. That is the week between the 9th and the 16th. The week between the 16th and the 23rd, we saw, again, they're both still moving down, but more parallel at this point to each other. They're not crossing. Did have some up movement. We have a green up box. A lot more up movement on the wick that never materialized. And the market closed actually below, well, right at the 2-day trend line. So we're still in a confirmed down movement for the entire week. If we quickly look at the daily chart, what do we see? Well, the week opened on the 19th, and we see up movement throughout the week on the daily chart. A little bit of a pullback with some down movement on Friday, down 0.46%, but it was a strong week. The daily chart crossed over going up on the 22nd at the same time as did the derivative oscillator. So again, up on the daily chart, down day on Friday. The other 4 days were up. Still have a confirmed down move, of course, on the weekly chart. Now let's shoot from there to the S&P 500. S&P 500 confirmed down move, actually still moving down on the MACD, and the derivative oscillator heated up going down. That should tell you something as far as how long this up movement's going to occur. We have a spinning green top, means lots of indecision, and the market closed well below the weekly trend line. So still confirmed down. Mark that for those of you who are using our daily worksheets. Mark that on your worksheet. Let's look at what happened throughout the course of the week. The market was a little bit up on Monday and Tuesday. Then with the Fed announcement, soared up Wednesday and Thursday. Down day on Friday, down 0.55%. Crossed over just like the total market did going up on the 22nd on the daily chart, both on the MACD and the derivative oscillator. So confirmed down move still on the weekly chart, which is the big one that, of course, we track this one time a week in the weekly review and forecast. Now let's go to the Qs. The Qs is still in a confirmed up move, and we saw the Qs sort of start edging down on the week ending the 26th of August. And again, another down week on the 2nd of September, followed by two more much more down weeks on the 9th and the 16th. And the week of the 23rd was a big up week for the market. Still in a confirmed up move. That never changed, unlike the other two charts on the weekly chart. So that bounce up was not anything that was not already happening on the weekly chart. Now, if we go to the daily, what do we see going on? Well, we see that the Qs crossed over going up on the 21st. And actually started the week with some up movement, a little bit of down movement around the 20th Tuesday, and then up big time on Thursday with some up movement, of course, Wednesday afternoon after the Fed meeting. But that big up movement, big up movement on Thursday, well above the Bollinger Bands, settled out down. The most of those three indexes, 0.65% on Friday. So the Qs is still in a confirmed up move on the weekly chart. Keep that in mind. Important to remember. Okay, lastly, we're going to go to gold before we get into the news. Gold is in a confirmed down move still. We have not drawn a trend line because we couldn't really find a good one to draw at this point. But gold's in a confirmed down move on the weekly chart. We can see that gold had a sort of, again, some up movement during the week, what we would call a spinning top, lots of indecision as far as the weekly price goes on gold. So if we pull back and take a look at the daily chart, what do we see? We see on the daily chart, starting on the 19th, gold slid sideways the 19th and the 20th, and then moved up strongly the 21st and 22nd, and again down a bit of a as far as our Heiken Ashi type candlesticks, gold was technically up 0.07%, but compared to the way that we measure price movement in the Heiken Ashi candlesticks, it is a red open box. So again, lost some of that upward moving strength. If you would like to know more about the Heiken Ashi candlesticks, why we use them, how they work, how we read them, you need to go to our website or to iTunes or to YouTube, and you can listen or watch our Heiken Ashi candlestick teaching. I particularly would advise you to watch it in video. So you might try either the website or YouTube. And that's Heiken, Heiken Ashi, Ashi. So that is where we are as far as those charts go. All four of our charts, three of our indexes, please make sure to remember where each of those weekly charts are, because all things being equal, the market tends to move in the direction of the biggest chart. And the biggest chart for us is our weekly chart. Now, let's talk about some market-making news. What actually went on throughout the course of the last week? As we told you last week, you needed to pay close attention to what was going on Wednesday with that Fed meeting, and it did affect the market. What did the Fed do? Well, the Fed said they're going to hold rates steady, but they made a case for a late 2016 rate hike. They've been making a case every Fed meeting, haven't they? And they haven't done it yet. Why? Because the market, the world market, is weak. We'll hear a little more about that in just a minute. Anyway, that kind of news, of course, more free money to flow. Fed going to keep printing unlimitedly without anything backing it. That's just great for the market somehow. So it did cause the market to soar, but as the week ended, that happiness and effusiveness may be wearing thin on the market. Do pay close attention as we jump into the week. If you haven't already heard our daily review and forecast, you need to listen to that. We've already produced it. It's already out. It'll give you some more insight into that. What about the Bank of Japan? Well, they're shifting gears after many years of their policies. They have now decided to change things a little bit. Going forward, they are going to keep the 10-year Japanese government bond yields around zero. And they hope that this will allow the long end of the Japanese yield curve to steepen, a development that would be welcomed by the Japanese insurance companies and pension plans, which have struggled in a low yield environment. I tell you, the Japanese, just a complete mess, isn't it? They just keep trying to run the economy, the bank does, and they have turned into just a sad sack. It is just terrible to watch, and they can't seem to get out of it with their aging society. Well, we'll continue to watch that. What else do we have going on? Well, the global bond issuance nears pre-crisis record. Listen to this. Global bond issuance around the world is running at its fastest peak since 2007. Let's see, what happened in 2008? Oh yeah, a crash. A total of almost $5 trillion of debt has been sold globally year to date, and that almost matches the 4.91 trillion sold during the same period in 2007. Issuance is running 9% ahead of the pace set in 2006. And these figures don't include sovereign bonds sold at auction or municipal bonds. The super low borrowing rates are spurring companies to lock in cheap financing. So we shall see what we shall see. This is another good one. The OECD, that's the Organization for Economic Cooperation and Development, is predicting that global gross domestic product will rise only 2.9% this year and 3.2% next year. That is absolutely terrible. But of course, our market's soaring. Why? Free money. That seems to be the only thing that makes the market run. What else do we have going on? Well, we have a new week upon us, and we have Janet Yellen speaking on a couple of occasions that could affect our markets. But let's jump in as to what's going on Monday first. ECB, the European Central Bank, President Mario Draghi, is going to be testifying before the European Parliament's Committee on Economic and Monetary Affairs. It's going to happen on Monday. What's that going to do for the market? Probably not much, unless he says something crazy, which is not likely. Oil ministers from OPEC are going to meet in Algeria. They're going to discuss a production freeze. That's going to happen on Monday all the way through Wednesday. That could have a little effect on the market if something crazy does happen. But the big potential market moving things are going to happen Wednesday and Thursday. You're going to have Janet Yellen, the head of the Fed. She's going to be testifying before the House Financial Services Committee. You'll want to pay attention, see how that affects the market, if she spooks it or makes it exuberant again. And then on Thursday, she's going to speak in Kansas City, the Kansas City Fed Forum. She could say something there. Most likely, if there's going to be any market impact, it'll be on Wednesday again. And then, of course, on Thursday, there's going to be the revised second quarter U.S. GDP data. That's really good or really bad revisions. That could affect the market some. And the U.S. fiscal year is going to end Friday the 30th of September. So there's going to be all sorts of congressional action to keep the government open. We're going to see that start happening. So again, if we have anything wacky happen there, it could affect the markets. But the biggest thing may be Janet Yellen on Wednesday. So just keep that in the back of your mind. Nothing like the committee meeting itself this past week, but it could have some impact if she says anything that harrows or makes the market feel wonderful. Thank you so much for being with us. We appreciate you. Hope you appreciate these weekly reviews and forecasts along with our daily reviews. We are here for you. We love to hear from you. You can contact us anytime at Charting Wealth. If you want to help us out, give us a 5-star rating on iTunes. Say something nice about us. Also, go to our YouTube site, Charting Wealth, and subscribe to our channel. We so appreciate you being with us. Again, let us hear from you. Let us know what you need. Hopefully, we're providing you with the training and the consistent daily reports that help you learn how to read a stock chart. Because I'm telling you, my friends, as you practice this, as you learn how to read these stock charts, you can become a market master. And when you do, the world and riches are your oyster. God bless. Take care from Charting Wealth.